Hey folks, welcome to a product review at Phenomenal. In this video, we are going to analyze some of the top pension funds in India. And in the pension fund category, there are a lot of schemes. And we are going to analyze the scheme E, which E means equities. And there are also other schemes like A, G, and C. A means alternatives, G means government bonds, and C means corporate bonds. Since we are going with the equities, I've taken like five pension funds, and just from looking at the performance, right, I don't see a big difference here. Um, when you have a lot of options, right, you want a clear winner, just to pick something. Here, I don't see a big clear winner here. So, for example, like if you take LIC, it has underperformed all the other pension funds, but I don't see a massive difference here. I think in terms of just performance, right at the top, you have ICICI pension fund, then you have HDFC, then the NPS Kotak pension fund, fourth being Aditya Birla pension fund. So that's it for the performance. I don't see a clear winner here, but let's move on to the other analysis of the video. Since this is an equity fund, it is obviously volatile. When you look at from a return or like a CAGR perspective, ICICI stands at the top with slightly higher vol. So the volatility, the variation in volatility is not that high. So it's 16.1 to 16.5. So in terms of the variation, almost all of them are in the same range, right? So between 16 to 17, 16.5%. The second CAGR being the HDFC pension fund. Since this is again focused on equities, you can see large drawdowns during stress periods like COVID or like volatility spike or 2016 market sell-off. You see a huge drawdowns during this period, and which again goes back to its equity nature, right? Again, we can see the same equity nature of these pension funds in the drawdowns as well during COVID. I think the LIC pension fund has lost the most, right, almost 32%, but also other pension funds have also considerably similar to LIC pension fund has lost about 30%. Now, going into the fundamentals, as we already know that it's equity focused, so there's no surprise in this. Going into the sectors, again, similar to the performance chart, I don't see a big difference here. There isn't like one standout, oh, this fund is focused on this sector or anything, right? So, pretty much all the funds have similar exposures with some, few percentage variations here. Um, which is again goes back to the performance, right? When you have similar exposures in terms of sectors, you don't see a big performance difference. Again, same factor beta is also pretty much similar. Almost all of them are exposed to Nifty 50. Interestingly, some of them have size factor as well, which means they have some exposure to small caps in their portfolios, except the Aditya Birla one, which slightly is towards low volatility factor. But other than the Aditya Birla, all the other four pension funds have some small cap exposure as well, but the exposure is very minute here. Now, going into the statistics, we again see the same picture in terms of annual returns. We don't see a big difference. Although ICICI pension fund stands out with 14.11%, the second best being again HDFC, almost close to 14%. Right? In terms of volatility, I don't see any big difference here. Again, CAGR are like almost pretty much close. HDFC being the highest in terms of Sharpe ratio, it ranks highest. Since these are all similar strategies, you are most likely it's most likely to be correlated, and that's what we see in this chart. The correlation between all these pension funds are in excess of like more than 0.9. So all these strategies are correlated, and also in terms of stocks, since it's an equity product, it's correlated to the stock, so basically the stock market itself. Now going into the style boxes to understand what's the what are the fundamental metrics, the underlying metrics, the stocks that the pension fund manager picked for these funds, right? Um, I'm comparing this to Nifty 50, but I think the much better benchmark would be in this case is Nifty 100, because pretty much all of them have more than almost 90 stocks, right? Except the Kotak pension fund. So we can first look at the in terms of comparing it to Nifty 50, we can look at it, then also change it to Nifty 100 to see how the valuation changes. So when you just look at in terms of growth potential, momentum, quality, they are all revolving around the mean, that is revolving around Nifty 50. So it has Nifty 50 characteristics in terms of growth, volatility, momentum, and quality. Only in terms of valuation and the market cap, there's a bit of divergence compared to Nifty 50. So you can see all the funds here compared to Nifty 50 have lower market cap. The median market cap is lower, and also some of them have higher valuation as well, except the NPS Kotak, which is in line with the Nifty 50 valuation. We can also quickly change to Nifty 100 to see how the valuation and the other metrics change. We don't see any much difference, much variation in terms of quality metrics, the momentum, volatility, and growth. But you do see that all the funds now moved to the middle, that is Nifty 100, right? So these funds have some sort of like Nifty 100 characteristics, right? So in terms of valuation, all the funds, in terms of even market cap, all the funds are similar to Nifty 100. The median, median valuation here. Now going into the number of stocks, right? So as previously I showed that all of them have pretty much more than 90 stocks in it, except ICICI pension fund, which is quite focused compared to the other 374 stocks. NPS Kotak NPS being the highly focused pension fund here. Finally, we come down to the look-through analysis, the top 10 stocks among these pension funds. And what's interesting here is the kind of weightage given to the top 10 stocks, right? So you can see there isn't a big variation here. That just suggests that all of these pension funds are market cap weighted, right? So you can see the Nifty 100, the benchmark that we have picked, is around 46.55%. The top 10 stocks adds up to almost 50%. And you can also see the same thing in, I think this one is LIC, which is again almost 50%, HDFC almost 50%. ICICI, Aditya Birla, and NPS Kotak is on bit on the lower side. ICICI is the lowest, the concentration in terms of the top 10 stocks. I think the main takeaway from this video is I don't see a big difference in terms of like which one is the best. If I got to pick one that kind of stands out, but again, all the 5 funds except I think LIC didn't do well in terms of performance. ICICI and HDFC, in terms of CAGR, they are pretty much similar, around 14% each. And also, when you look at the CAGR and volatility, they are pretty much the same. Now that we have come to the end of the video, let's compare these funds to a Nifty 50 mutual fund and see whether there is any difference here. So I'm just picking these funds, right? The pension funds, and comparing it to Nifty 50. The main reason to invest in pension fund is that you are saving it for retirement, and you basically cannot sell or get any money until you retire, right? One good thing, or probably the most important thing if you're considering NPS, is that 60% of your corpus, once you retire, 60% of the money that you're going to get from this is tax free. So if you're very tax focused and also you're planning for your long term and retirement, NPS is a great option compared to Nifty 50 index. But make sure that make sure that you cannot retrieve any of the amount, when you are in 10 years or 15 years until retirement. You cannot retrieve any amount, right? That's where I think these kinds of public mutual funds or ETFs come into play, right? Where you have liquidity in like few seconds or few minutes, you can sell any of these funds. So in terms of just pure performance, I don't again see a big difference compared to Nifty 50, right? So Nifty 50 again is in between all these pension funds. Almost all pension funds seem like they are going in the same direction with same trends here, right? The only difference, again, I mentioned that you have tax benefits. 60% of your savings comes tax free, whereas Nifty 50, you do have a very lower expense ratio of 0.04% here. And we also again have tax implications here, right? So when you're selling an ETF or a mutual fund, you're going to pay tax depending on whether it's a short-term capital gains or long-term capital gains. I think that sums up the video. Thanks a lot for watching. See you next time.